Well, good morning. Today is Tuesday. My name is Daniel McCrane with McCrane Associates. And at McCrane Associates, we work with small business owners to overcome obstacles and hurdles that they have, that they encounter as they're trying to increase profitability and scalability in their business. And we guarantee the work that we do there. We also work with business owners to leave a legacy in their business and work on their exit planning as well. So that's what we do here at McCrane Associates. So I've got some things I want to talk to you about today for tax planning strategies for business. We're coming up on fourth quarter here soon in a couple of weeks, and fourth quarter would be a great time to start looking at tax planning strategies for your business. That is, if you're on a calendar year. If your company operates on a fiscal year, if you happen to be a corporation, then some of these strategies may apply, some of these things may not apply. So when it comes to tax planning strategies, one of the things that will be very, very important. Actually, let me start with this one. I'll start with this idea. The first thing that you really need to consider is work with a really strong professional who can guide you in your tax planning. Look for someone who can actually look over your financial books, can kind of forecast a little bit about what to expect in the coming year, and can help you make some decisions that way. That's step number one. Find a really good qualified tax professional. McCrane Associates, we do not do that. Let me be very clear. We are we're not qualified, and not anything on our radar that we're going to be doing very, very soon. However, I am happy to make a couple of recommendations to some people that I know and trust. But that's step number one. Make sure that you're working with a really strong professional. The next thing that I would really recommend, I see this a lot with a lot of business owners that I work with, a lot of small businesses. They just don't have good records. They don't have good books. So when they try to sit down with a professional, so much time is wasted, and that's billable time, by the way. But so much time is wasted because their books aren't all put together. Profit and loss statements don't make sense. There hasn't been any bank reconciliation in over a year. Um, Double entries in books and just all kinds of things like that. So that would be another very important step for tax planning is work with a qualified bookkeeper who knows how to keep your books, and the money that you spend hiring someone to do your books professionally is going to save you so much headache and so much hassle and can actually contribute to better planning for profitability and scalability, which is what we're going for, and it can also uncover opportunities to reduce your taxes. Now, that's the next step then for tax planning strategies. There are so many rules in the tax code for how you can legally, ethically, morally reduce your taxes if you follow the rules correctly. So, this is so important. This is also why I say you need to talk with a really strong tax professional who can guide you appropriately. But there are so many opportunities to reduce your taxes in your business, and I doubt you know very many of them. Even the ones that you can name off, even if you feel very strong about tax deductions, the tax code is so huge. I bet there are a few that you don't know about. Tax deductions you can take, tax credits you can apply for, that you can apply to your tax bill, and just on and on and on. So, so many things there that you can look out for. And one of the things that you can do is instead of asking the question, is this tax deductible? Uh, Try to turn that on its head a little bit and say, ask yourself, if I'm going to spend this money through my business, how can this expense become tax deductible? So, for example, let's say you want to go on a trip, want to take the family on a trip. Well, one of the things that all businesses are supposed to be doing, and hopefully you are among the few who are actually doing this, your business should have at least annual board of director meetings or member meetings if you're an LLC, where you're reviewing past history of the business, making plans for the future of the business, and you're keeping minutes of what's supposed to be happening. If you were ever to get audited, the IRS would ask to see those meeting minutes. So at least annually, you need to be doing this. Why not quarterly? And why not have your board of directors meeting while you're on that trip? Then potentially some of the cost of that trip could be tax deductible for a board of directors meeting. See your tax professional for assistance on that. Again, I am not one. But if you can't figure this out already, it's very, very important that you work with a tax professional who can actually guide you, not someone who just takes your information and files your taxes for you, but someone who will actually look over your books and provide you some high quality advice for what to do on taxes in your business that will make a difference so you can actually grow your business. So I better stop there. This video is getting a little bit